Hello guys, so in this session let me solve some other problems under the category of deduction under section 80D, DDP and others. So here Mr. Chitti is suffering with 60% locomotor disability which is certified by medical authority. He is employed as customer service executive with Vodafone at a salary of Rs 4,20,000 per annum. He has also earned the following incomes during the previous year 2018-19. So here the assessee is suffering from the diseases called locomotor disability of 60%. So it is nothing but it will be categorized under section 80U. If the individual himself is suffering from any kind of diseases or any kind of disabilities, so that will be deductible under section 80U. So in such cases, if the percentage of disability is between 40 to 80%, so a fixed or flat amount of deduction of Rs 75,000 will be allowed, and if the percentage of disability is more than 80%, so a flat deduction of 1,25,000 will be allowed. So here locomotors will not be specified or will not be notified diseases under income tax authority, so it will be deductible under section 80U. Moreover, he is individual assessee is suffering himself. So during the previous year he had earned various other incomes. Those are income from government securities Rs 30,000. It is taxable under income from other sources. Insurance commission gross Rs 1 lakh. If the insurance commission is Rs more than 20,000, that should be gross up. But here it is already grossed up, so no need to gross up again. Entire amount is to be taxable. Then interest on savings bank account. It should be recorded under the gross total income for the calculation of gross total income. More later, it is deductible under section 80 TTA up to Rs 10,000. So first it should be taken under the heading of gross total income, means under heads of incomes. Then later it should be deductible under section 80 TTA. She has made the following payments during the previous year 2018-19. Medical insurance premium paid by check for his father aged 75 years Rs 21,000. So it is nothing but assessee has taken life insurance on his father for his father aged 70 years. He is called a senior citizen. So in such cases it is deductible under section 80D. So the maximum amount of deductions allowed for the senior citizen who are above 60 years is 32,000. So up to 32,000, so he can claim deductions under section 80D. So here anyhow it is 21,000 is the within the limit of maximum limit, so entire amount will be deductible under section 80D. The next, house rent paid for the year 2018-19, he does not get HRA from the company Rs 40,000 per month. So when the assessee is not getting the benefit of HRA from the employer, or if the assessee is residing or living in rented house by paying rent, so that he can claim deductions under section 80GG for tax rebate or for the tax deductions. So for this purpose we have a calculations, that is nothing but least of the three conditions. First one is rent paid minus 10% of gross, so adjusted gross total income, or government notified limit of Rs 5,000 per month, or 25% of gross adjusted gross total income, whichever is least, that should be taken as deductions. So that will do in the later part. Deposit with LIC for maintenance of father, mainly dependent on him for support and maintenance, and suffering from low vision with a severe disability of 80% as per the certificate of medical authority. So here also dependent of assessee, father is suffering from a disease of low vision with the severe disability of 80%. So here also the disease of low vision is not comes under the income tax specified diseases, so it should be deductible under section 80DD. So means deductions under section 80DD. So if under that, the maximum amount of limit of deductions will be under two categories. If the percentage of disability is ranging between 40 to 80%, less than 80%, so a flat deduction of 74% will be allowed. If the percentage of disability is more than 80% or up to 80%, a flat deduction of rupees 1,25,000 will be allowed. So now let me see the calculation part. So here, calculation of total income of Mr. Chitti for assessment year 2019-20. So first we need to find out gross total income. That means recording of all the kinds of incomes which he has earned in the previous year. So here he was working as a customer service executive for the salary of rupees 4,20,000 per annum. So that is nothing but income from salary rupees 4,20,000. He also earned following incomes: income from government securities rupees 30,000, that is entire amount will be taxable. Insurance commission rupees 1 lakh, it is already grossed up, so entire amount is taxable. Interest on savings bank account rupees 10,000. First it should be taken under gross total income for the calculation of gross total income. Later that should be deductible under section 80 TTA up to rupees 10,000. So gross total will be 5,60,000. So from this, less deduction under section 80C to 80U, which are all the payments or investments made by him, those are all deductible under specified categories. Medical insurance premium paid by check for his father aged 70 years, 21,000 rupees. So that is deductible under section 80D for the medical insurance premium. Moreover, his father is senior citizen, the maximum limit will be 32,000. So here the amount of premium is 21,000. It is less than the limit, so entire amount will be deductible. Next, house rent paid for the year 2018-19. The assessee is residing in rented house. For that, he is claiming deductions under section 80GG. So as I said earlier, for the house rent paid under section 80GG, we have separate calculations. That is nothing but least of the following: rent paid minus 10% of adjusted gross total income. So here adjusted gross total income means gross total income minus deductions under section 80C to 80U except 80GG. That means total of all the deductions except 80GG. The balance is called as adjusted gross total income. So for this purpose, first record all other investments, expenditure or deductions. At the last, take deductions under section 80GG. So next, so that will be doing the later part. So the next, deposit with LIC for maintenance of father, that is nothing but 80DD, payment of LIC to payment to LIC for maintenance of severe disabled father. A flat deduction of 1,25,000 will be allowed. Then the assessee himself is suffering from disability of 60%. It is ranging between the 40 to 80%. So a flat deduction of 75,000 will be allowed under section 80U. Be careful with the individual part, assessee part. So they have not given, they won't give any information about the means assessees himself, how much expenditures he had incurred for treatment of diseases for himself. So we should be consider whether we should be find out whether the assessee is suffering from any diseases himself or not. So that will be given in the problem. So first that should be find out. Moreover, if the assessee is suffering from any diseases, that will be deductible under section 80U. So the next 80 TTA, interest on savings bank account, maximum rupees 10,000 will be allowed. So now calculation of house rent paid. So here the deduction amount will be least or minimum of the three cases. First case is rent paid minus 10% of adjusted gross total income. So rent paid is, so here the house rent paid for the 2018-19 for rupees 40,000 per month. He is paying rent of rupees 40,000 per month. So yearly will be 4,80,000 minus 10% of adjusted gross total income. So here adjusted gross total income will be gross total income of rupees 5,60,000 minus 21,000, 1,25,000, 75,000, 10,000. So the balance will be 3,29,000. So out of 3,29,000, 10% will be allowed. So the differences is to be taken as first condition. 4,80,000 minus 32,900, 4,40,000, 47,100. Second case, government notified limit of rupees 5,000 per month, that will be 60,000, or 25% of adjusted gross total income, 25% of 3,29,000, 82,250, whichever is least, that will be allowed as deductions. So among these values, least will be 60,000, so he can claim up to 60,000 as deductions under section 80GG. So after the total deductions amount will be 2,91,000. So gross total income minus total deductions, the balance will be total taxable income. So likewise, so you will be having two illustrations to find out the taxable total income. So let me explain the concept, means various transactions, various categories of like incomes and expenditures. So in the first illustration, Miss Sunita submits the following particulars: incomes, computed salary income of rupees 2 lakhs, it is taxable income from salary. Computed income from property let out rupees 65,000, income from house property. Agricultural income from Bangladesh rupees 1 lakh, it is taxable under income from other sources. Any agricultural income from other nation, other country, that is taxable under income from other sources. Share of income from HUF, it is exempted, not taxable. Computed income from short-term capital gain rupees 75,000, it is taxable under the head of income from capital gain. So here we have out of 5 incomes, so except share of income from HUF, remaining all are taxable. The total of all these incomes is to be called as gross total income. So she had incurred various expenses during the previous year. Those are life insurance premium paid rupees 28,000, sum assured rupees 25 lakhs. So any kind of life insurance policy is taken for himself, spouse and children, that will be allowed as deduction under section 80C. So under section 80C it is deductible. The maximum amount of deductions will be 10% of sum assured or premium amount paid, whichever is least, that will be allowed as deductions. So here the amount of deductions will be 28,000 or 10% of 25 lakhs, 2,50,000, whichever is least between the 28,000 and 2,50,000 is deductible. The next, medical insurance premium paid rupees 18,000, it is deductible under section 80D. So here they have not given on whom or for whom the policy is taken. In such cases it should be considered as self, that means insurance policy will be taken for himself, that is deductible under section 80D. So under section 80D, if the policy is taken for self, so the maximum amount of deductions will be 25,000. So here 18,000 is within the limit, so entire amount will be deductible. Loan repayment towards home loan installment rupees 20,000, it is deductible under section 80C. So here any kind of loan taken for the registration of the house property as well as loan repayment towards home loan installment both are deductible under section 80C. So under section 80C, with respect to the home, so registration of house property and the repayment of housing loan both are deductible under section 80C. Entire amount will be deductible. So after making adjustment with the gross total income, the balance will be taxable total income. So next, in the next problem, Mr. Charan, aged 63 years, is a lawyer. He earned professional income computed of rupees 6,50,000 during the previous year 2018-19. So he is a lawyer, assessee is a lawyer. So in his profession he has earned income of rupees 6,50,000. It is nothing but income from profession. He also earned interest of rupees 14,500 on the savings bank account with Amarnath Cooperative Bank during the year. It is an income taxable under income from other sources. So first, interest on savings bank account, first it should be taken for the calculation of gross total income. Then next, it is deductible under section 80 TTA maximum of 10,000. So the next, compute the total income of income of Mr. Charan for the assessment year 2019-20 from the following particulars. So first, life insurance premium paid to Reliance Insurance in amounting to rupees 25,000 for insurance of life of his dependent parents. The insurance policy was taken on 15th April 2013 and the sum assured on life of his dependent parents is 25 lakhs. Generally, it is not eligible because to claim the deductions under section 80C, the life insurance policy must be taken only for himself, spouse and children. So if any life insurance policy is taken on self, spouse and children, that will be allowed as deductions. Otherwise, any policies taken on parents or dependents, that will not be allowed. So it is not eligible for deductions. Next, life insurance premium of rupees 25,000 paid for the insurance of life of his major son who is not dependent on him. The sum assured on life of his son is rupees 15 lakhs and the life insurance policy was taken on 25th February 2011. So here the policy was taken by the assessee on his son, children. So it is allowed to be deductible. So here it is deductible under section 80C, life insurance premium. Moreover, here the most important thing is policy was taken on 25th February 2011. So if any life insurance policy is taken before 2012, the maximum limit of 20% is to be given on sum assured instead of 10%. So the amount of deductions will be amount of life insurance premium or 20% of sum assured, whichever is least. So if any policy is taken before 2012, we should find out 20% on the sum assured. Otherwise, if any policy is taken on 2012 or after 2012, 10% to be calculated on the sum assured. So here the calculation will be 25,000 or 20% on 15 lakhs, that means 30,000, whichever is least. 25,000 is deductible under section 80C. Next, life insurance policy premium of rupees 22,500 for insurance of his life. The insurance policy was taken on 8th September 2012 and the sum assured is 2 lakhs. So here also the life insurance policy is taken for himself. It is deductible under section 80C for self. So calculation will be amount of premium paid or 10% of 2 lakh because the policy was taken on after 2012. So 10% of 10% of 2 lakhs, 20,000 or 22,500, whichever is least, that will be deductible. Premium of rupees 20,000 paid by check for health insurance of self and his wife. So assessee has paid health insurance premium for self and his wife jointly of rupees 20,000. It is deductible under section 80D, health insurance premium. Maximum limit will be 25,000. So entire amount will be deductible. Health insurance includes health checkup coverage, maximum of rupees 5,000. So here rupees 1,500 paid in cash for his health checkup and rupees 4,500 paid in check for health checkup for his parents aged above 85 years. So it is a kind of preventive health checkup expenditures. So the maximum amount of preventive health checkup amount to be allowed as deduction is 5,000. But here the total amount of health checkup expenditure is 1,500 plus 4,500, 6,000. But for claiming deductions, you can claim up to 5,000. So under section 80D, 20,000 and 5,000 can be claimed by the assessee for deductions under section 80D. The next, paid interest of rupees 6,500 on a loan taken from bank for MBA course pursued by his daughter. So assessee has taken loan for higher education of his daughter. So on such loan he has paid interest. It is nothing but interest on education loan. It is deductible under section 80E. so entire amount of interest will be deductible. He stays in a rented accommodation and rent paid him is 10,000 per month. The assessee is not getting any benefit of HRA from the employer. He is residing in a rented house, so for that he is claiming deductions under section 80GG for house rent paid under section 80GG. For this we have a calculation that is nothing but rent paid minus 10% of adjusted gross total income. As I said earlier, adjusted gross total income means gross total income minus all the deductions except 80GG. Gross total income minus under section 80C to 80U except 80GG, that is called as adjusted gross total income. So first condition will be rent paid minus 10% of adjusted gross total income. Second condition is government notified limit of rupees 5,000 per month. Third case is 25% of adjusted gross total income. Whichever is least, that will be taken as a deduction under section 80GG. So after making all the adjustments of deductions with the gross total income, the balance will be taxable total income.